In Australian suburbs, mortgage pain is hitting home as news of another interest rate hike drives up loan repayments.
I was surprised because obviously everyone thought it would be coming in May.
I think it's a little bit ridiculous to put interest rate up 2 months back to back.
Not helped by spiralling fuel prices.
Yeah, I think it's more pressures on my life, yeah.
According to research from Roy Morgan, the latest rate rise could leave more than 1.4 million home borrowers at risk of mortgage stress once the rate increases are passed through. The Commonwealth Bank, ANZ and NAB will hike home loans on the 27th of March. For Westpac borrowers, it's the 31st.
Yes, we can help you with that today.
Calls to financial counsellors have increased.
After the interest rate rise, we saw our busiest February since before the pandemic, so since 2020. And that's really important for us because February is usually our quiet time, makes us think we're probably about to see that increase continuing across the year.
Australians facing tough situations are being advised to get on top of their debt faster.
And that might mean calling up your creditors, calling up the bank or your telco or your energy company and explaining your situation and asking for a hardship arrangement.
The Reserve Bank's hiking interest rates to cool the economy and stop prices from rising so fast.
It is possible that 410 marks the peak in the cycle and the RBA are done, or it could actually be possible that they might need to push past 4.35, depending on what happens to the growth story, depending on what happens to the inflation and the inflation expectation story.
But if the oil price pushes higher and impacts the global economy...
For the Reserve Bank, I actually think that's the scenario where they suddenly, pivot quite quickly from a world in which they're worried about inflation to one where they now basically say, we think the hit to growth is going to be big enough that as it transmits from a global recession to Australia, that we might not have to worry about doing too much more on rates. And in fact, it could even be possible that they have to reverse course a little bit.
The pain for borrowers is expected to increase as the cost of living crisis collides with mortgage pain. But it's a different story for Australians who have paid off their home and have savings. If the banks pass on those rate hikes, it means more interest earned on their money, allowing more spare change for life's small pleasures.
It is a good thing because they have term deposits, and as those term deposits expire, I go and put them in, renew them for another 6 months or so at the best interest rate to suit.
Other retirees are concerned about the impact of higher rates on their children.
2 daughters have got mortgages and they're finding it a little bit tough to carry on. And that one of them has taken on extra work to help pay for the mortgage.
Will affect our sons. So yes, so it's a hard time for them as well with petrol rises as well.
A double whammy to the hip pocket nerve.